$236.54. That's where Nvidia just printed today, a brand new all-time high, again. AMD, up over 15% in a single session, blasting past $400. Tesla just snapped a 5-month downtrend like it never happened. The entire chip and EV complex is on fire at the same time. The only question left on Wall Street tonight is brutally simple. How much higher can this melt-up go before something finally cracks? Start with Nvidia, because Nvidia is the floor of this entire market. Today's session printed a high of $236.54, locking in another record close. And the analyst notes are not getting more cautious. They are getting louder. Cantor Fitzgerald just hiked its price target to $350. Bank of America's Vivek Arya now sees $320. The lowest of the new bumps still sits at $275. Wall Street is climbing the ladder, not stepping off it. Here's the lopsided detail almost nobody mentions. Out of 42 recent ratings on Nvidia, 40 are buys. One single hold, one lonely sell. That's a 95% buy rate on a multi-trillion-dollar company. You usually see that kind of consensus on small-cap rockets, not on the largest stock on Earth. When the biggest stock in the world is also the most loved name on the street, you have to ask the hard question. Is the easy money gone? Or has the real run barely started? The bull case is brutally simple. Hyperscaler capex for next year is being revised higher almost every single week. Microsoft, Meta, Google, Amazon. Together they are funneling hundreds of billions of dollars into AI infrastructure, and every dollar of that capex still has Nvidia's name stamped on the back of it. Blackwell shipments are sold out into the middle of next year. The Rubin platform is already pre-booked deep into 2027. Demand isn't slowing. The only constraint left is how fast TSMC can physically print the silicon. The bear case is just as sharp. At today's price, Nvidia is bigger than the entire German stock market. It is bigger than the GDP of Japan. If Cantor's 350 target actually hits, you are talking close to $9 trillion in market cap on a single chip company. That math doesn't care how good Jensen's keynote was. One soft quarter of cloud capex, one new China export restriction, one cancelled hyperscale order, and the unwind from these levels would not be polite. Which brings us straight to next week. Nvidia reports first quarter earnings on May 20th. Options markets are already pricing an implied move of around 7% in either direction. That is hundreds of billions of dollars in market cap swinging on a single press release. The setup is bullish. The expectations are bullish. The whisper number is bullish. Anything less than a blowout quarter and a raised forward guide, and this whole melt-up trips over its own shoelaces in real time. But here's the wild part of this rally. The hottest AI chip trade in May 2026 isn't even Nvidia, it's AMD. Lisa Su's company is up 66% year-to-date, tripled in 12 months. Today, the stock punched through $409 after one of the most violent up days the entire chip sector has seen in years. The market is no longer pricing AMD as a polite Nvidia alternative. It is now pricing it as a full co-leader of the AI build-out. The earnings backed it up in style. First quarter revenue jumped 38% year-over-year. The data center segment alone, the AI heart of the entire business, soared 57% to $5.8 billion in a single quarter. That one division now does more revenue per quarter than the entire company used to do just a couple years back. One business unit, on its own, is throwing off Nvidia-style growth numbers, and it is by far the fastest accelerating piece of AMD. Then came the forward guide. AMD told the street to expect $11.2 billion in revenue next quarter, 46% year-over-year growth at the midpoint. The company also nearly doubled its long-term server CPU forecast, from 18% growth all the way up to 35% over the next 3 to 5 years. When a chip CEO doubles their own forecast on a live call, the bond market notices. When Lisa Su does it personally, the equity market loses its mind. The customer list is the real shock here. Meta just locked in a multi-year deal for up to 6 gigawatts of AMD GPUs. 6 gigawatts. That is the power output of multiple nuclear reactors going straight into AI data centers. OpenAI signed on for the new Helios platform. Microsoft is reportedly expanding orders quietly in the background. 2 years ago, AMD was the polite second choice. Today it is being designed into the same hyperscale racks that used to be Nvidia-only territory, no questions asked. So how much higher can AMD go from here? Look at the math. Trading near $410 right now. If you simply apply Nvidia's current price-to-sales multiple to AMD's new run rate revenue, You can pencil in a clean path well into the high 400s without needing a single new miracle. If Helios ramps faster than guidance, the bull case stretches toward 500. The chart is not stretched. It is breaking out from a multi-year base on heavy volume with no sellers. But this is exactly where it gets dangerous. AMD now trades almost entirely on AI hope. If hyperscaler orders even hint at softening, if one earnings call casually mentions digestion, lead times, or inventory build, this stock will not give back a polite 10%. It will give back 20% in a single week. 66% year-to-date moves always cut both ways. The same speed that took you up is the exact same speed that takes you back down, only faster. Now flip the chart completely. Tesla, the single most controversial stock in this entire rally. After a brutal 5-month correction stretching from December all the way into May, the stock has finally broken out. Today it trades around $445, up almost 3% in 24 hours. After months of being written off, declared dead, and slapped with a $25 sell rating by the most bearish desk on the street, Tesla is suddenly the comeback trade of the entire spring. The bull narrative completely changed in March. Tesla officially launched the $25 billion Terafab chip facility, a joint venture with SpaceX and xAI. Cybercab pilot production kicked off at Giga Texas. The Tesla Semi finally hit mass production after years of painful delays. 3 separate story arcs that Wall Street had basically given up on, all suddenly delivered in the same single quarter. The robotaxi narrative is not a slide in a deck anymore. It is now an actual factory production schedule with line workers and shifts. The analyst tape tells you absolutely everything you need to know. RBC, Piper Sandler, and Cantor all carry price targets between $500 and $600 over the next 12 months. Cathie Wood's ARK Invest has long-term targets reaching from $1,400 up to $2,900 by 2027. The bearish camp, JP Morgan, UBS, Phillips Securities, still sees fair value as low as $220 per share. There is no consensus on Tesla. There is only deep conviction in opposite directions. So when does TSLA truly break out for real? The technical answer is already happening right now. 5-month base, higher low, breakout above the prior pivot, volume confirms. The fundamental answer is way messier. The real breakout requires Cybercab revenue to actually show up on a future income statement. Not slides, not demos, not promises, real billable dollars. That is the exact moment the valuation multiple resets from car company to AI mobility platform. That is the moment $600 stops being a dream. And do not forget Optimus. Tesla is now openly positioning humanoid robots as the next product category. If the company can show even a few thousand commercial units actually shipping by the end of 2026, every single valuation framework Wall Street currently uses for Tesla gets thrown straight in the trash. The stock stops trading like an automaker entirely. It starts trading like Nvidia, priced on the sheer size of a future market that doesn't even fully exist yet, with a multiple no spreadsheet can justify. Here's the uncomfortable truth knitting all 3 of these stocks together. Nvidia, AMD, and Tesla are now trading on the exact same single underlying bet. The bet is that AI infrastructure spending keeps accelerating for at least 3 more full years. If that bet is right, 350 Nvidia, 5 to 100 AMD, and 6 to 100 Tesla are all conservative numbers. If that bet is wrong, if hyperscaler capex even flatlines for a single quarter, all 3 of them roll over together. Correlation in melt-ups is high. Correlation in unwinds is always higher. The historical playbook is sobering if you actually study it. Cisco hit 10-bagger status during the dot-com run. It still owned the network, it still printed real cash flow, and it still lost roughly 80% of its value when the spending cycle finally paused. The mistake back then wasn't believing in the internet itself. The mistake was paying literally any price for the picks and shovels. The current AI chip rally has not yet had that test, and historically, it is overdue for one. So set your levels now. Watch Nvidia's May 20th print closely. If the guidance ticks higher, $250 is on the table almost immediately. Watch AMD for any hint of hyperscaler digestion. Silence on the call is bullish. Even one mention is fatal. Watch Tesla for actual Cybercab unit numbers, not slides and not demos. These 3 names will set the tape for the entire NASDAQ through summer. Up together or down together. There is no middle outcome anymore. Pick a side carefully. Which leaves you with the one question that actually matters tonight. Are you buying these melt-ups, Or are you the one quietly taking profits while everyone else chases the chart? Drop your call in the comments right now. Nvidia 350, AMD 500, Tesla 600. Which target hits first and which one fails the hardest? I am reading every single reply on this video. Make your case, defend it, and I will pin the sharpest one to the top. If this video brought you value, hit like, subscribe, and share it with a friend. Thanks for watching. See you in the next one.